So a quick recap of what we have seen with markets so far. Certainly we do know from last week that the attention remains on the Federal Reserve this week. And as things stand right now, we have not seen any key events thus far, and certainly the markets itself is really remaining quiet. So on a week-to-date basis, we have seen the Dow Jones and the S&P 500 index itself seeing almost near neutral week-to-date changes, and this is despite brief disturbances in the political scene when President Donald Trump's eldest son was seen to review an email of his in communications with Russian counterparts that briefly caused a dip with concerns on how this could aggravate the situation in the investigation into Trump and his Russian ties. But as things stand right now, market had managed to rebound, and the anticipation is really lying ahead to what's going to happen with the Federal Reserve. So we know that this week we have the Fed Reserve Chair Janet Yellen and her testimony to the House and also the Senate. So as of 8:30 p.m. today in Asia, we are going to see the testimony being reviewed, whereas her appearances will be made at 10 p.m. on Wednesday and Thursday here in Singapore time. And I think the market itself is really looking forward to what she has to say. So from last week's Fed minutes, we have seen a rather mixed outlook, and the latest Fed official to speak, Federal Reserve Governor Yellen herself had actually went a little bit on the dovish side, highlighting the fact that interest rates path could actually be nearing the end of its term. So I think for the market, that is going to warrant some concern with how Federal Reserve Chair Janet Yellen will position herself with regards to economic outlook, particularly on the inflation and also the balance sheet reduction. So we do know that recently the series of bound route itself had actually created quite a bit of pressure for equities market, and for Federal Reserve Chair Janet Yellen is really about the balance between how she wants to channel that hawkish message from the Fed, and at the same time ensure that this does not create some panic within the equity markets as well. So looking forward to that event, I do think that the market will look very closely to the US markets, and this includes the US 500, which is correlated with the S&P 500 over here at IG, and also the currency markets, specifically dollar yen. So with what we have seen in the yield market itself, is really keeping that movements within dollar yen quite pronounced with respect to all these market reactions towards the monetary policy. And so for the dollar yen itself, we've seen it really trading within this wider range of 108 spot 50 to 114 spot 30, and I do think that there could be some risk to the downside, as particularly given that rather dovish signal we've heard from Yellen. And should that actually happen, we could see the dollar yen itself trading down towards 111 spot 80. But on the flip side, we might think that the market itself is really going to see Federal Reserve Chair Janet Yellen really trend alongside her recent hawkish tone, and that could actually provide some upside for the dollar. And meanwhile, for the equities market, the US 500 has really been trading between the levels of 2407 to 2450, and that range-bound trade has been really working very well at this current moment. So look forward to what the Fed themselves have to say. But the main star of this section is, of course, into the end of this week. We have earnings reports coming through from the US banks such as Citigroup and JP Morgan, and looking forward to how that itself is going to form market action. As things stand right now, analysts themselves have penned in 6% growth expected for banking sector in terms of earnings per share, and I do think that should we see any surprise on the upside, that could really help US markets on the next leg forward.